Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning and welcome to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Thank you for joining us here for the IRS Solution Attorney Show.
How you doing, Katrina?
Doing great. Still got that raspy little coffee voice a little bit, huh?
Yeah, I think the common cold is like terrible. And I saw a funny joke recently.
It actually makes your voice sound a little bit better. It's not so bad for you.
It said that it's a well-known fact that a man suffering from a common cold goes through more pain than a woman in labor. So.
Oh, please. Where is Heather when I need her?
Oh, boy, am I in trouble.
I've had 3, okay?
All right, if you want to call in and give us some hate, it's 888-404-1010. That's 888-404-1010. And I am the IRS Solution Attorney, Darrin T. Mish, so you know where to point it.
That's right. And you can get him off air if you have a tax problem. He's at 888-GET-MISH.
Or getirshelp.com.
And so, last week we were talking about this stat, Darrin, that you said you saw or you found somewhere. It was a pre-tax stat. Remember you were talking about that?
Oh, yeah. So today we're going to talk about the history of the income tax in the United States, which sounds kind of boring, but I promise to try to make it really interesting because I think it's fascinating. Because we have a tendency to think as taxpayers after we grow up and we start figuring out who this FICA guy is and why they're taking so much of our paycheck. We have this tendency.
Do you remember that when you were a teenager and you look at your paycheck and you go, wait a minute, where did this money go?
This is how old I am. I was doing the math. I was making $3.35 an hour, and I was doing the math, and so I knew how much money I was supposed to get, right? And then you get your paycheck, and there's like this big bite taken out of it, and you wonder, like, what's up with that?
What happened?
So we have a tendency to think that the income tax has been with us forever, and so we have this tendency to just think that that's how it is, and that's how it's always been, and that's how it's always going to be. And the stat that you were referring to that we talked about off air was there was a period of time in U.S. history when there was no income tax, and it was from right after the Civil War in about 1869 to about 1913, and that was called the Golden Age or the Golden Era. And during that time frame, there was no income tax in the United States because there had temporarily been an income tax passed to wage the Civil War in the Union, at least. And that golden age had the highest rate of sustained growth in the U.S. history. There was over 6% growth annually in GDP in income per capita from that during that period. And I would attribute a lot of that to the fact that we had no income tax overhead. The government was small, the federal government was small, and it wasn't burning through our cash like it does now. And that's one of the reasons why we don't have more job growth and we don't have more economy growth is because we have this government overhead. And now that we have our national debt is so high and our debt service is so high, there's waste there too. Now I know this is kind of controversial, but you know what? The government doesn't and cannot create jobs. It really can't. Not by spending money anyway. The government can create jobs by reducing regulation, reducing bureaucracy, and getting the heck out of the way. But the government cannot take $100,000 from me and create a $100,000 job for someone else because there's that government overhead.
Multiple jobs.
Yeah, they can't do that. There's overhead.
I'm listening to you talk about the golden era, and it makes me think and wonder if the government were to temporarily suspend taxes. I said, okay, we're not going to take any taxes out of your check for this whole next year. How that would change the economy.
Oh, my goodness. It would be absolutely amazing. Now, there would be a lot of people hurt from the standpoint of the federal government does provide essential services. And remember, this was terrible. In 2013, we had that about 6 weeks where the government shut down.
Oh, yes, we remember because in my world, that also meant that no money was passing through the Federal Reserve, which meant that no money could be wired, which meant that no closings happened during that time.
Well, listen to how bad it was for me. It was terrible. I about went bankrupt. And 2013 was the worst single year I've had in business, been in business over 20 years. Here's what happened to me. I had the tax resolution firm. I had a bankruptcy firm. Okay. Well, what happens when the federal government shuts down? Well, the court shut down. right?
Everything shuts down.
The IRS shut down. So the way that clients end up finding me is the IRS applies pressure to them by filing liens or having revenue officers or levies or wage garnishments or whatever. And so the federal government tends to push people in my door on the tax resolution side. And at the time when we had the bankruptcy filing or the bankruptcy firm, you couldn't file a bankruptcy, basically. So there was basically I had all this staff, all these people that needed to be paid and
doing nothing,
and who actually did get paid, but I had no revenue coming in. And so, not to mention the national parks, you're talking about the Federal Reserve.
What
there's
happened?
all kinds
I
of things.
forget what happened again. Why did the government shut down? I remember when it happened. I just don't remember why.
It was some dispute between the Republicans in Congress and Barack Obama, and somebody said, "Oh, well, I dare you," and the other one said, "I double dog dare you," and then they just shut the whole thing down for about 6 weeks, and it was not good. That's not the way you should do things, but. And it's a cool fantasy that you have, if you shut the government down for a year. But we'd have to have essential services, and then we have to have the discussion about, well, what are essential services?
It would just be interesting to see how things change. Like from an observation perspective, it would give us a whole lot to talk about for a year.
I think that Donald Trump is going to really reduce, or at least he says he's going to try to reduce bureaucracy and waste and regulation and those types of things.
I think he will.
And I think he's going to try. I don't know if he will or not. I don't know if he's got the chops. I think he's going to go to Washington. I don't think he understands how dysfunctional that place is. I don't think he understands how broken it is.
We'll get him when he gets there.
If he can chop through that and make stuff happen, then he's going to go down in history.
No matter who you voted for, I think that's why a lot of people voted for him, is because he wasn't scared to take on people like that. And he said, I'm going to make a stance. So whether you like him, don't like his hair, whatever.
I actually don't like his hair. I hate his hair.
Nobody likes his hair.
But
he'd probably look decent bald.
I like about 60% of what he says, and about 40% of what he says makes my skin crawl.
I think that's the same for the general consensus.
Compare and contrast to about 98% of what Hillary said made my skin crawl. So I guess I had to make that choice.
All right, Darren, here we go. No political talk. Let's move on.
So anyway, going back to the history of the income tax in the United States, when the country was actually founded, this is an interesting historical fact that we always forget that there was a country here, or there was a system before the Constitution was passed. It was called the Articles of Confederation, and it didn't really work. And that's why they ultimately passed the Constitution. They ratified the Constitution because, which I believe was in 1791. So from like 1776 until about 1791, there was the Articles of Confederation. And the way that the country was envisioned was there would be 13 individual states that were loosely aligned. They were part of one country, but each state, the reason they chose the term state, because remember, the word state before the United States was founded meant country. Right? Because you had Sparta and Athens were city-states, and so state actually meant country. And so the whole idea was that each state would run much like its own country, and that if you didn't like how your state was working, you were free to move to another state. And so the states were supposed to be experimental laboratories for democracy and for government and to see how things worked. And over the years, what's happened is we've abandoned the principles of federalism. Federalism means that the federal government should be weak and the states should make most of the decisions. So federalism has been abandoned, and we've gotten a stronger and stronger and more sort of overreaching federal government.
Yeah, it's because it's polar opposite the way we live now. It's definitely the states are definitely not stronger than the federal government.
Yeah, but there still are significant differences in the way that states are governed, and I think that's a good thing. I mean, on one opposite end of the spectrum, you would have California that's a nanny state that just believes that everything should be regulated. We were out there a couple of weeks ago, and literally you see this Prop 65 sign everywhere that says this establishment contains some chemical which might cause cancer. Now, the funny thing about that particular law is that you see those signs literally everywhere. And so what does that do? It makes you ignore it.
Yes.
Now, if you're a tourist, I just laugh. I just think, look at this. This is idiotic. That the owner of this establishment has to put this stupid sign up that nobody pays attention to because they're everywhere. I mean, they were at Disneyland.
Yeah.
No kidding. There's probably some stuff at Disneyland that might cause cancer.
That's not what they're looking at.
Newsflash, pretty much everything causes cancer, right? We're in a studio here, and there's some microphones and electronic stuff, and guess what? There's probably some stuff in here that might cause cancer if you eat it. which you probably shouldn't do.
But I know a lot of Californians, and they are so different than you. And so I know you're born in California, but you definitely do not belong there.
Which is partly going back to my comment that each state was supposed to be like a little laboratory. When I decided to leave California was when I was graduating from law school. It was in part because of the political climate. It was in part because of the economic climate was just bad at that time in the 90s in California. They had lost a lot of military bases, which caused kind of like an avalanche through the economy. You take that much money out, then it caused the economy to sort of shrink, and that was impacting lots of different areas. And so I had to decide where I wanted to live when I sort of grew up, right? I was going to have to take the bar exam, and I was going to go ahead and start a life as an adult.
Well, why don't you hold that thought, because we have to take a break. I know you hear the music. You're listening to the IRS Solution Attorney Show. This show is all about the history of income tax. When we come back, we'll recap for you, and we'll continue to dive in. Back in a moment. Welcome back. You're listening to the IRS Solution Attorney Show.
I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madel. Sorry to cut you short, Darrin.
That's okay. When in the last segment, I was telling sort of an uninteresting story. And
I thought it was pretty good, actually.
How I ended up moving from California to Florida.
So said you didn't fit.
And part of it was I just didn't fit with the political climate, and some of it was economic. But my point in the story was I started to look for my ideal state that I wanted to live in. And I had different criteria. I wanted there to be a good economic, situation. I wanted housing to be cheap. I wanted it to be warm. So I actually drew a snow line across the map of the United States, and everything north of the snow line was like, out, not going to happen, not my thing. I have, friends who they have to shovel like 6 feet of snow out of their driveway. That's not my deal. I'm a Southern California kid. Like, that's not going to happen.
I'm from here, too. I can imagine that.
And I wanted there to be good boating and fishing. So the only place that really met all those criteria, really, was Florida. And so that's why I've come to love Florida, and I've lived here for, a long time.
Which is fitting, but it's funny that you say you actually looked at a map, you drew a snow line, and you picked a state. And unfortunately, Florida also hits the national news pretty often for all the crazies.
And I think part of that is, number one, we're like the fourth largest state by population, okay? So, like, that makes some sense. But also, Florida has this, like, sort of vagabond thing going on where people from up north have a tendency to come down here oftentimes to escape their trouble. I would see this in the criminal defense work all the time. Is they would like leave Ohio because they had a warrant or whatever, and they're like, I'm going to go someplace where it's warm.
And we have a beach and beer.
Yeah, exactly. And, Jimmy Buffett and all that stuff. So that's how they end up down here in Florida, and that's how we end up with all those funny stories. That and alligators contribute to funny stories all the time.
They do. Some not so funny, but some are funny. But going back to the history of income tax, which is pretty interesting because that pre-tax stat that you shared in the beginning part of the show talked about, right after the golden era, how people basically didn't pay any taxes, and it was good for the economy.
So a lot of people figure, that the income tax has been around forever, and if we didn't have the income tax, what would happen to the federal government? And it's interesting because, from 1791 to 1802, the U.S. federal government was much smaller, of course, but it primarily supported itself on tariffs and excise taxes. Excise taxes are taxes on things, on special products. Right now, in the U.S., we have excise taxes on fishing tackle. Can you believe that? One of the reasons why fishing tackle is so expensive is because there's this big excise tax on it, and there's an excise tax on it because then, allegedly, that money goes to improve fishing and conservation in areas throughout the country. I mean, that's a theory. I don't know if that happens.
There's some of that. I mean, there's a lot of protection over, if you're trying to build a house and you see a spotted owl, you're done.
Tell you what,
I won't
say it on air, but I have some acreage, and if I see an endangered species, I'm not exactly sure how that's going to turn out.
Well, you don't even know. I mean, I don't know that I'd recognize all the endangered species. But.
Did you see there was we might have talked about this on air a couple weeks ago. I saw those Ring video doorbells? They take video of who shows up at your doorbell.
I have a property like that now. Yeah.
Okay, so I saw somebody in Tampa had their Ring video doorbell, and a panther drug a doe up onto their front porch and ate it. And this was in suburban Tampa.
That. Really?
And so they say there's no panthers in the Tampa Bay area.
Oh, there are.
Well, they definitely
We've seen
are.
them. Yes, there are. There used to be one that was, my grandparents lived pretty much right off of Del Mabry. Like, you can hear Del Mabry in their backyard. And there was a panther that frequented that little apex woods for forever.
Interesting. And everybody says, oh, no, it can't possibly be a panther. Sometimes bobcats get really big. Well, let me tell you the difference. Bobcats don't have tails. They don't have long tails like a A panther's tail is long.
Yes.
In this particular video, that panther had a long tail.
And the Florida panthers, too, there's a lot of them here.
Well, I don't know about a lot. It depends.
They're
So
not living
anyway,
in your backyard.
back to the history of the income tax and not Ring video doorbell game camera footage.
It's pretty cool technology, though, you have to admit.
So it's been interesting that throughout our history as a country, that wars have actually brought on the necessity for income tax. So when the War of 1812 came along, which is really like Revolutionary War Part 2, because we're fighting the British again.
Right.
And by the way, my Canadian friends like to tell us that they won because they burnt the White House down, which actually might not be a bad idea. But anyway.
Okay.
Anyway, so when the War of 1812 was being fought, they actually contemplated briefly passing an income tax, and then the war ended. And so they didn't do it. So by 1817, Congress actually did away with all internal taxes, all the excise taxes. There was no income tax. They did away with everything. And all they had were tariffs, and tariffs are taxes on imported goods. Interestingly, something that Donald Trump keeps talking about. He's like, these other countries like China are kicking our butts because their stuff is too cheap and we need to pass tariffs. Now, a lot of people think that that is a totally revolutionary idea and it's going to be the end of the world, but tariffs have been part of this country's history for the last 200 years. Now, I'm not passing judgment on whether it's a good idea or a bad idea. I don't know. I don't have enough information. But in 1817, our country was running entirely on just off of the taxes from tariffs.
It's interesting, too, that some of the first sale taxes were actually on gold, silverware, jewelry, and watches. Interesting, huh?
Yeah, it sounds to me like that makes sense because those were sales taxes on sort of higher end goods. And so I think the theory probably was the poor guy wasn't going to get crushed. I mean, in 1812, when that was passed, the sales taxes on, gold, silverware, jewelry, and watches, that's not like the poor homestead dirt farmer going to pay that. That was like, the moneyed landowner class was paying that. And I think that was probably more palatable at that time than it would be today.
So what about in 1862?
So 1862 comes along, and we remember from, American history class in high school that's right about when the Civil War started. And
I think they should make you take, that stuff later in life.
So you can actually appreciate why it matters.
Yeah, and I think you can relate to stuff because you have an idea how economic works. I mean, think about this. You're a kid, and they're making you learn all this Civil War history stuff. You're like, this is so boring. Like, I don't want to learn about any of this. But when you grow up, and you realize how that could actually impact your life, it's more interesting.
I think one of the reasons why we're actually talking about the history of the income tax here on the show today is because a thorough understanding of history allows us to prevent those mistakes that were made in the past. And I think that's one of the things that kids don't get because they don't have enough life experience, period. So they don't understand, how it was a mistake or how they might be able to apply that to their life. But in 1862, the Civil War is going on, and people don't realize this, but the Civil War was the most deadly conflict that we've ever engaged in as a country by far. I mean, there was hundreds of thousands of people killed during like 4 years. Actually, yeah, it was 1862 to 1865. Like some huge number. It was in excess of 500,000 dead and, uncounted, casualties that were maimed and missing limbs and whatnot. Compare and contrast to the wars that we've been engaged in now for like the last 15 years. I mean, I think that the total death toll was under 5,000. Right. Not to discount those 5,000 and their sacrifice at all, but I mean, it's an order of magnitude different. And so
they were just so wild. Like they would just run in droves and, fight each other head on. Now they, fly planes into buildings and crazy stuff.
Well, not to mention that back then there was really no medicine to speak of. And so if you got shot, you were probably going to die of infection or they're going to cut your arm off or your leg or wherever you were hit. And so, there's just a lot more people died because there wasn't really good medicine. They didn't even understand sanitation and germs and bacteria and that kind of thing. And so that's what led to a lot of the extra, people dying. But so it was such an epic struggle that the Union went ahead and passed an income tax because they just needed to do it. They had the industrial base to win the war, far in excess of what the Confederacy had, but they still needed money. I mean, wars cost money, and that's one of the things that we don't always, as a modern society, really think about. At the beginning of or after 9/11, I doubt very many people knew and would have been behind a war that was going to last 15 years and cost $1 trillion.
No, but it depends on who you ask. Like you talk to some of our military folks, they're going to give you a different opinion.
Yeah, and right? I don't want to, and I don't want to go far down. I don't want to go too far down that road about how they could have done things differently and better. But so in 1862, Congress went ahead and enacted the first income tax law for the country. And it was kind of a forerunner of our modern system in that it was based upon a progressive taxation scheme. And what we have here back then was if a person was earning between $600 and $10,000 a year, they paid tax at the rate of 3%, which sounds kind of laughable to us now.
Yeah, because we're like 25% plus.
And if you made over $10,000 a year, which was a lot of money in 1862, then you paid tax at a higher rate, probably around 5%.
Which is kind of crazy, though, when you think about it, a higher rate at 5%. And now some of these people they have tax rates well into the 30s. And you have to look at that and go, how did we get here?
Yeah, we talk about this from time to time on the show where I'm not sure that a person who makes more money paying a higher percentage of taxes and makes that fair. It doesn't make any sense to me. Maybe I'm just feeble-minded, but I think it's kind of wrapped up in these bizarre notions that if you make more money, then you have enough. But what is enough? I mean, based on whose opinion or
yeah,
who,
it's all relative and it's all about perspective. And it's about that time. We're going to take a quick break. You're listening to the IRS Solution Attorney Show. If you want to get Darrin, you can reach him at his off-air number, which is 888-GET-MISH.
888-438-6474.
We'll be back in just a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back. This is the IRS Solution Attorney Show.
I am your host, the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Maidlaw. If you're just now joining us for the show, today's show is all about the history of income tax in the United States, and it's actually pretty good content.
Yeah, we started out as a country with really no income tax at all, and the first income tax was not passed until about 1862, and it was for the war effort for the Civil War on the side of the Union. And a little factoid, in 1866, the tax revenue collections reached their highest point in the nation's history to that point, and that was $310 million. Another interesting fact was the Treasury would not collect that much again until 1911. So that's almost 50 years it took them to get to $310 million again. And I think part of that was because the federal government's scope at that time was just so much smaller. The federal government was just designed to do fewer things. It was, designed to protect the border, wage war, impose tariffs, and that kind of thing.
Right.
Not have, 37 different federal agencies with a huge cabinet.
Which, it all changes over time, right? Is there some fat that could be trimmed? For sure. I think most people would agree to that. So the Act of 1862.
Well, this is the first commissioner of the Internal Revenue. Now, it wasn't called the Internal Revenue Service, and I would argue it should be called the Internal Revenue Service either, because they don't provide a whole lot of service. But anyway, the commissioner's office was formed in 1862. And he was given the power to assess, levy, and collect taxes, and the right to enforce the tax laws through the seizure of property and income and assets and that kind of thing. And so that was the very first time in our history that office existed and that power existed.
And so it's interesting. I'm watching this timeline here on this outline in front of me in this progression. But in 1868, Congress again focused its taxation efforts on tobacco, distilled spirits, and eliminated the income tax in 1872.
That's kind of cool, right? So they put an income tax in 1862, and they use it to fight the war. Okay, that sort of sounds legitimate. The country needed money to do that. And then what I think is cool is that somehow And I don't know all that much history about how, in particular, Congress decides to abolish it 10 years later in 1872. And so all these people who were talking about abolishing, and Ted Cruz in this last presidential election was a big proponent of, we should abolish the IRS and go to like a flat tax or a fair tax, that kind of thing.
That would be interesting.
And it could happen. You know, we tend to look at things in really short time frames. But if we just look back 100 years ago, it happened where they abolished they basically abolished the whole taxation bureau, or at least the income tax.
So I'm curious what happened to those people that have, offers on the table or owe this money.
I don't know. You might need a lawyer to figure that out when that happens, And then from about 1869 until 1913, like we said in the first segment of the show, there was that was the highest rate of sustained growth in the nation's history. It was over 6% during that entire time frame, and in part, I would argue that was because there was no income tax in place for most of that time.
And
so
short-lived.
Yeah. So it came back in 1894 and 1895, real briefly. And then what happened in 1895 is the U.S. Supreme Court decided that the income tax was unconstitutional because it was not apportioned among the states in conformity with the Constitution. So what does that mean?
It's laughable at best.
What does that mean? I think what it means is that the states were not contributing revenue in a proportionate share to their population. Yeah. I think that's what it means. And I've not read that case to be honest with you, but I think that's what that means. In 1913, the 16th Amendment to the Constitution actually was passed, which is unbelievable. What that means is it had to carry both houses of Congress and 3/4 of the states to agree to impose a constitutional amendment. I mean, that is so difficult to do because 3/4 of the states means most states have 2 legislative bodies, and they have to pass both of 3/4 of the states. Now, there weren't 50 states back then.
But that's still a lot.
But it's still a big hurdle, and it was intentionally designed that way when the Constitution was enacted. It was designed to make it, somewhat difficult to amend. But it's hard to imagine what the political climate was and what the real need was in 1913 for the federal government to get a 16th Amendment passed so that they could collect and levy and collect an income tax. It's hard to imagine what the rationale was back then. And I think what it was is there was a progressive movement in the United States at that time, and Woodrow Wilson was president. And Woodrow Wilson was
I'm glad you didn't ask me that question.
Yeah, he was a strong progressive, and he believed in basically advancing social programs, and he wanted more money in order to sort of run these experiments so that we could have bigger and allegedly better social programs. And that's where it all started, which blows my mind. I think that this is controversial, but I think if we were allowed to keep more of our money, number one, there'd be more economic activity.
People would spend it.
And number two, and people will definitely disagree with this, but number two, I think we would give more money to charity, and charity would be able to do more good.
I think so too.
Because I think if you count on the government, to tax some other guy, because that's what people do is they vote for higher taxes because it's always going to be on some other guy, some rich guy, some phantom fantasy rich guy, and then there's a government sort of overhead. If you've ever dealt with any government bureaucracy like I do every single day, you can see just the waste and incompetence and whatnot. And so even if you were talking about welfare, right? Let's say there's $100 worth of welfare benefits that you want to administer. Or I guarantee you it doesn't take $100 worth of tax bill to generate that $100 worth of benefits. My best guess, and I'll have to look this up, it's probably like $150 or $200 because of that government tax in there. You've got all these government workers running the program, and they all get Cadillac benefits, health care, retirement, pension, all these things, all these days off. I mean, they get Columbus Day off, for goodness sakes.
It's ridiculous, the days they take off. You look at that, there's a ton of federal holidays.
Every October 12th, I'm at work, and I'm like, why am I not getting calls from the IRS? Oh, that's right, it's Columbus Day. But we can't even call it that. It's like National Indigenous Peoples Day or something.
I don't even understand that. But so on this timeline, looking at it in 1918, that's where stuff really started changing.
Yeah. So remember we said in 1869, we got to, actually 1866, we got to $310 million. Okay. By 1918, we've passed the income tax like the second or third time, the revenue rose to $5.4 billion.
That's a crazy difference in that short amount of time.
That's huge. What that means to me, just looking at the stats, is there was an explosion of what the federal government was actually involved in. It's a relatively short period of time. You could argue, well, industrial revolution and all that kind of stuff. Okay, fine. Don't machines make it easier and cheaper for people to live better? The need for taxes should have gone down, not up. That would be my argument.
Well, it's interesting, too, because there's a big gap in our timeline, and what happened in between these things was remember the Great Depression and the collapse of the...
Well, hold on. We haven't got to the Depression yet. So, in 1918, tax revenue went to $5.4 billion, but if you remember from history, World War I was from 1914 to 1916, at least our involvement. So that makes some sense. You gotta ship all those guys and all that stuff over to Europe to help, save the world. And so they had to collect some more money. So this is also an interesting fact. Prior to 1943, there was no withholding tax from your paycheck. So we were talking about that FICA guy,
right? And
who's this FICA guy and why is he taking all my money? Well, prior to 1943, they didn't withhold any money from your paycheck. And so what happened is everybody filed a tax return on April 15th, and everybody owed money. Everyone owed money. And so what did that do? Well, it made it really hard to collect the money because so many people would get so far in that they couldn't afford to pay it. And so
think about it. If you've never owed money and now all of a sudden you do.
Right. So in 1943, we're right in the middle of World War II, and they're having trouble, funding the war. They need more and more money because, this really is the struggle for humanity at this point. And they have to put their heads together, and they're like, how are we going to make it so that taxpayers actually pay their taxes as they go so that not everybody's behind? How we can get this money? Oh, ding, ding, ding. I have an idea. We'll take it straight out of their paycheck before they even see it.
And there FICA was born. Little FICA.
Actually, FICA is related to Social Security, which we don't get until a little bit later, I think. But actually, Social Security was passed in the 30s. But that's when withholding actually came to being, was in 1943, and they did it because everybody was owing taxes.
Kind of think about that, too, in the 30s. So within not even 100 years, we created this, and now it's bankrupt.
Yeah, well.
Only the federal government could do that.
We'll see. And I think that Congress passed the withholding because it's sort of like a lemmings situation, right? Like lemmings will just follow the lead lemming right off the cliff. And if you take the money out of people's paychecks before they see it, you can kind of see it on your pay stub, but it never goes through your hands. Right?
You don't count on it unless you're 15 with your first job.
Yeah, it just
then
gets,
you realize you can't count on it.
It just gets ripped right out of there before you even see it. And they did that to basically hide the taxation rate from the population. This is really why they do this. It's so that you don't understand how high the tax rate is so that you don't get angry and vote them out.
Yeah.
That's kind of the way I see it.
Again, we went from 3% to 30%.
Yeah. And at various times throughout our history, the highest tax rate has been as high as, 50% or more. And
when was that?
That was prior to the Tax Reform Act of 1986, when Ronald Reagan came into office, the highest tax rate was 50%. And it was the highest tax bracket was like that fantasy rich guy who's going to pay all the taxes.
Which is ridiculous, but he also had the largest tax cut in history, and he was also one of the most loved presidents in history.
Exactly, and in part because by overhauling the tax system with the Tax Reform Act of 1986, he lowered everybody's taxes. That stimulated economic activity tremendously, created a whole bunch of jobs, and essentially he proved that trickle-down economics actually works. Now, I just made a bunch of more people mad. But trickle-down economics is the idea that if tax breaks are given to larger companies, they will reinvest that money.
Which they do. They hire people.
And they'll hire more people. They'll create more jobs. And then those people's jobs, the taxation on those people, will actually go into the Treasury, and then you'll have a net gain of tax because that money's working. It's churning away. And that's one of Donald Trump's actually theories that I think we're going to see. It's going to be fascinating, where he's trying to repatriate all that money that like Apple and these various big companies have offshore. He's going to give them a break to bring the money back here to the U.S. so that it will work here in the United States. And we've talked about the fact that they're talking about building iPhones in California, of all places, instead of China.
Again.
And I think the additional cost of an iPhone built in California versus China is going to be like $50 or something.
Everybody would pay an extra $50 to know that they were U.S.-based jobs. I think they would.
I think probably. So especially if they repatriated, the billions that they have overseas that are working in the Irish economy and the Chinese economy and the Singaporean economy. If you brought that money back here.
Well, you're listening to the IRS Solution Attorney. Hang tight. We've got to take a quick break. We'll be back in a minute. When we come back, we'll talk about some more relevant changes that have happened probably that you might be able to remember. It's all about the history of income tax. We'll be back in just Welcome back. Thanks for sticking with us through the break. You're listening to the IRS Solution Attorney Show.
With the IRS Solution Attorney, Darrin Mish.
And I'm your co-host, Katrina Madewell. And today's kind of an interesting topic, even though I'm definitely not the history buff, I have to say. This show is all about the history of income taxes in the United States, which has been pretty interesting.
Yeah, as you can probably tell, I'm really a history buff, and I really like the study of history. One of the things I like to do when we're going on family vacations and whatnot is, and it has a tendency to drive my kids a little bit crazy, is we stop at historical locations and, Civil War battlefields or forts or where battles were fought and that kind of type of thing. I like to see where it actually happened. This country is actually young enough that you can have you can almost feel your ancestors there.
Viking ancestors.
Well, at least my American Viking ancestors. That's an inside joke. I found out recently that I'm 9% Scandinavian. So when I saw that on my DNA report, I quite normally or quite typically
bought the Viking cufflinks. That's what you did.
I decided that 9% Scandinavian meant that I was in fact Viking, and I've really embraced the Viking thing.
Yeah, I love the cufflinks. That was something.
So
you have to follow Darrin online on Twitter and on Facebook, and you'll see the various cufflinks. I think you have more cufflinks than anybody I know.
Yeah, you'll know more about my personality if you follow me on Facebook than you probably ever cared to. But I like to have fun, and to me, life is nothing if you're not having fun.
That's right. So going back to Mr. Ronald Reagan.
So Ronald Reagan, one of my idols, honestly, I grew up in Southern California. He was the governor when I was born, actually. And what he did is he actually overhauled the tax system in 1986, and he lowered the top tax rate from 50% to 28%, the lowest it had been since 1916. So right there, he's my hero already. If he does nothing else, he's my hero. He reduced income tax dramatically. And of course, when I was a kid, and my parents weren't in that 50% bracket, and I wouldn't be in that 50% bracket now if that had still been in place. But it just doesn't seem fair to me that anybody should toil away and give up 50% of their income. It just, to me,
it's high enough.
To me, it's a disincentive to continue to work and be productive. So the other thing that he did was he eliminated some tax preferences to make the system more fair. Basically,
like what?
There was a lot of kind of hinky tax deductions before 1986. So you could invest in oil and gas, and you could lose more than you invested and still get a break. There was a lot of real estate stuff that happened, and it's hard for me to speak real clearly about it because I was in high school at the time, or I was just out of high school,
so I don't remember any of it.
But there was a lot of stuff that there was a lot of ways to have like paper losses where you could actually make money prior to 1986. And
I'm going to look that up.
Yeah, and he closed a lot of those loopholes because it really wasn't fair. Schemes where you could, buy into an oil well for $5,000 and have a $10,000 loss. And so that's not really.
And I'm like, okay, where does the $5,000 go exactly?
So that was some of the Tax Reform Act of 1986. And then Bill Clinton comes along in 1993, and he passes another tax act.
We almost had to specify which President Clinton, right?
Yeah, well, thankfully, President Bill Clinton comes along in 1993, and he actually does some good stuff, and that's in part because he has a Republican Congress, and he has to kind of work. They have to work together, which is not happening right now, or hasn't happened. Under Obama, they have not been able to work together at all. And what he does is he goes ahead and he cuts the capital gains taxes, which I do remember, which I think is a good thing. Because capital gains taxes, in my mind, are really unfair. Because if you invest in a house, for example, and you take all the risk, and then it appreciates in value, and then you have to pay capital gains tax, like Uncle is always your silent partner. And that doesn't seem fair to me. He's not your partner in your losses so much. He just wants to be partners in the gains. And that happens in gambling, too.
Well, I believe in that. I'm a big proponent on that. And you can bet that, NAR, National Association of Realtors, Florida Realtors, they're all on board for that.
And I think there's a reasonably good chance that the capital gains tax could be abolished under President Trump. We'll see. It's that one thing would certainly stimulate the economy.
Yeah, and he's a real estate tycoon, so that would be expected.
That would certainly stimulate it. So another thing that Clinton's, his second tax act is he cut taxes by $152 billion. He cut the capital gains tax. He gave us the $500 per child tax credit, which I'm a fan of since I have a couple kids. And he gave us some of the tax incentives for education, the Hope Scholarship and all that kind of stuff, which is good for people who are in school, I guess. George W. comes along.
Signed a bunch.
And I don't know if you remember this, but George W. gave us those weird rebates. Do you remember that?
Yes.
He did it twice.
They were just out of the blue.
Yeah, one of them was like, and here's his theory was, if we give you $300, you're going to go out and spend money. Well, I guess.
I don't think it really happened quite the way they expected.
It didn't really work. He did it twice, as I recall.
People were confused when they got those checks. They're like, is this a trick? Like, what am I doing with this?
And I was doing tax problem resolution work at the time. And so what you would see is you'd see, okay, my client files a tax return, doesn't pay his taxes, he owes $8,000 or whatever. And then you see this stupid $300 credit. Like, okay, whatever. That doesn't make any difference. It didn't help any of my people. I can tell you for sure that not one single client that I was representing had their tax bill eliminated because of the $300. Not one. I do recall getting the checks, and I do recall running out and, I don't know, spending it on groceries or something that I would have spent it on anyway. But I also can tell you I didn't run out and buy something specific with the $300. I just don't think it was big enough. I mean, $300 per taxpayer is a lot of money, but I mean, our economy is big, and I don't think it was big enough.
There's a lot of things you can spend $300 on, but there's a lot of things it doesn't touch.
Yeah. And then there's been some, a couple tax bills here and there along the way, but that's pretty much the history of the income tax here in the United States. So let's talk about real quick a couple of the options. So Ted Cruz was talking about in the election, in the primaries, he was talking about we could have a flat tax. Well, a flat tax would be where everybody pays the same percentage. I kind of like that idea.
I do too.
The other one is a fair tax, and I think the fair tax, and somebody could call in and correct me if I'm wrong, I believe the fair tax is more like what Trump is proposing, where there's fewer brackets, and there is still some graduation based upon how much money you make. But it's more fair because it's just slimmed down. Most deductions would be eliminated under that system, which you and I would not like because that would eliminate the home interest deduction, which would be bad for
Well, they've
real
been
estate.
talking about that for a long time, but you have a lot of lobbyists. Like every year, a whole bunch of realtors get together. They lobby stuff, not only in Tallahassee, but they lobby nationally for that type of stuff.
I think it'd be really unfair to eliminate the home interest deduction because there's a lot of us who have sort of based our financial life on that deduction. And if you rip it away, especially if you just rip the Band-Aid off and it's like it goes away in 1 year or 2 years or 3 years or something like that, it can be really rough. And I think it would have a really bad impact on the real estate market, especially on the higher end stuff.
Yeah. It would have some impact. And then you got to think capital gains ties right in there too. I mean, that's all, they work hand in hand. So we're already out of time, Darrin.
Oh, wow.
You're listening to the IRS Solution Attorney Show. Sorry we missed a train wreck this week. We also have some great questions. We're going to answer those for you guys next week, we promise. Thanks so much for joining us this week. But for this week,
we're out.